Good afternoon. I did not plan to do a session today, but given how crazy the market was today, I figured it's good to launch a quick session for about half an hour to discuss my thoughts and my action today. Give me a second. Let me open up the chat room so I can see what's going on. What a crazy day. But it was more in line with what I thought the market should behave. Okay, let me clarify that. Okay, everything up and running correctly. All right. Okay, this morning I discussed that I thought the market didn't take the CPI data as seriously as I thought it should because the TLT, if you pay attention, the TLT gap big, okay? The 10-year treasury went from 1.8 to 2%. Massive move, okay? For a bond, that's massive, okay? I didn't like that. I thought the market should go down a lot more. And for the first, well, in the first 15 minutes, the market went down. And then it snapped back and it even went green. And I'm like, that's crazy. I was taking profit on some position. And then one of the Fed started speaking, I believe, around lunchtime. And then since then, it had been a bloodbath in the market. And I think this is more in line with what I thought the market should have done right at the get-go. But I'm glad that it is behaving that way. So TLT, as you can see, we have a ways to go. Can TLT go down another, how far can it go? 3 more points. So it's about 2.5% more. Yeah, it's possible. Rate was this high back in when? When was rate this high? Back a year ago. Okay, a year ago, rate was this high until we get hit with the Omicron variant. And no, the Delta variant first, and then the Omicron. Okay, so that's the two wave where fear come in and scare the market, and people, go into bonds, drive rate lower. So TLT went up on these two spike, but now we are near the point of the low in TLT going back to March of last year. Okay, so take a look at the QQQ. Look at that. You see where the QQQ was? Isn't that a coincidence where the Q was? Where the low of the market was March of last year. Look at where the Q was. That's where the Q was. So see, this is why, remember, I said that in general, especially in the last few years, there is a high correlation with the way QQQ moved with the TLT. The low in the TLT was March of last year. Look at the low in TLT, okay? And then we get this ramp. So this is what concerned me about the stock market. You see this? We are so far away. TLT is already rolling over close to where it was a year ago, okay? Be very mindful of this. See, this is TLT. We are 2.5% away from going back there. Look at where the NASDAQ is. It doesn't have to move exactly in sync, okay? But no doubt you can see the correlation, right? So the fact that the NASDAQ is not even back to the low a month ago is a concern to me because it has so much more room to fall, okay? A lot more. I'm not here fear-mongering that, oh my God, we can crash another 10%. I don't know. But surely staying up here is a big concern for me. All right, I don't think it's right. It doesn't make sense for me that the market is strong in that area right now. So that's my concern. Okay, now what did I do today? I did buy TXN. For those that pay attention to what I said this morning, at the end of my session, I mentioned that I threw in an order to buy TXN at 171. Okay, and what did I do? As I watched the market turn weaker, right? I put the order in at 171 pre-market, all right? And then of course, the market got crazy. And then guess what? Once the market started to roll over, I moved my order down to 170. Okay, right here. And near the end of the day, I bought 5 shares, just a small entry for now into Texas Instrument right there where I wanted to buy previously, and I'm okay just with a very tiny foothold into Texas Instrument right here. Would I add more at 169? Yes, but for now, at least I got in where I keep missing the previous 2 weeks or so, okay, or 2 days, the previous 2 or 3 days. So I'm okay. I'm okay with that entry right there. What did I sell? I sold LH in the beginning of the day at 287. Okay, I talked about that, I think, in the chat. I sold at 287 in pre-market, and my God, it it went crazy after that. And I bought back some of the position. I sold a third of my holding at 287, and when it dropped down to 270 something, I bought back. How much did I buy? I bought back a third. I sold a third and I bought back a third. I wanted to buy more, but it ran back too much, too fast. So I'm okay doing nothing here. Okay, so in many ways, I'm happy that I was able to take profit on some and then repurchase $9 lower. Big win there. So that's what I did. What else did I do? I added to Starbucks because it's still going sideways. I'm okay adding some Starbucks here. What else did I bought? I bought some more XBI. Okay, down here. I'm okay adding here. What else did I buy? Did I buy a little Nike? Yes, I did. A little Nike in the 144 down here. Okay. Not much, but keep adding, keep stacking the share there. Is it going sideways? That's okay. What else did I buy? Oh, one of the question I had the day before was Martin Marietta. Good report, good quarterly earning, and then it dumped. So what did I do? I bought the dump. Okay, I'm a big fan of companies that have good earning, solid projection, and the market dump. So I jump in. I wish I bought more. No worry. I bought 370 something. Okay, so I bought some at 372-ish. So I'm pretty happy with that. And it would run. So I'm fine with that entry position there. I'm glad I was able to jump in a little bit there. Martin Marietta. We talk about Disney. What an ugly day. Oh, what a disappointment for Disney, okay? Pre-market looks so good. I had my order in to sell some at 158, okay? And it never got there. It never got there, all right? See, this is after hour, okay? This is yesterday after hour. So this morning, I'm just like, oh man. So I had my order in. It never, in pre-market, it looked like it's gonna get there, but once the market opened, see you later. It never got to my order at 158. No big deal. okay? But it just tells you how weak Disney is. I thought before the market opened, and I discussed this, that Disney is going to be one of those gap and slide. Who knows if that's going to be correct because how the market overall behaved today, but surely this was not good, okay? Not good. Same can be said with Chipotle. Chipotle had pretty good earnings yesterday, and right now it's below the 50 MA, okay? So it's not holding. It's not holding here. Yesterday, looking good. Today, given how bad the market is, we had to wait another day, okay? We had to wait. But if I was long Chipotle, what would I do? What would most traders do if I was long Chipotle? Some of them would put a stop right here, 1568. They would not want to give up the low of today. The worst case scenario is you want to put your stop right at the low of yesterday at 1545. Okay, you know why? If that fails to hold, you know what they say, fill the gap, right? So the last thing you want to do is if you bought Chipotle down here and you're in profit, would you want to give back everything? Okay, no way. Nobody want to. Not one trader would say, yes, I don't mind giving back everything because I don't want to pay taxes on the gain. That would be epically stupid. So keep that in mind on Chipotle. No position there for me. Oh, let's take a look. Remember when I talk about Walmart not being interesting here? I have mentioned Walmart many times in the past 2 weeks and said to myself, nah, guess what? Now it's getting to be interesting. So I'm watching it closely. So below 135, I will get an alert because I think 134-ish would be a great spot to buy. Okay, look at Walmart. 1, 2, 3, 4. All right. No rush to buy Walmart yet. My brother was thinking about buying Walmart today, and I said, don't do it. We can get a little bit cheaper. Just be patient. If the market keep dumping tomorrow, Friday, you might get your chance to buy Walmart at 135 or lower. So yeah, Walmart now is starting to look very interesting. What else did I look at? Oh, my brother and I was discussing this one. Gilead. Look at this. Look at this. Gap down. Remember, the rule is 3 days or more. Look at this ugly move here. Gilead. Gap down. 1, 2, 3, 4, 5. I believe I mentioned this in a chat a day or two ago, and I said that the reason why it can go more than 3 days is because of the reference low support below. Because if the reference below is not that far off, then naturally it would drip even lower until it hit that spot, and it did hit that spot. Okay, so we are there. Gilead is on my watch list tomorrow. Perhaps a nibble tomorrow could be happening with Gilead. Okay, so I like it. I like it a lot. See, look at this line. Okay, this line going back 3 years has been a key spot. Okay, buying here has been very prosperous for my teacher and I for many times. See that? See, many times. And we are there. In fact, before I launched the chat, I texted him and he's just like, yippee-ki-yay. He's ready. He's loaded and ready for tomorrow to see if he sees a sign of what he wants to see tomorrow is an overshoot. An early wick down to like maybe 60, below 61. Then he start to buy because then it will reverse just like this. See, you see these wick. See this? Wick down, wick down, wick down, wick down. See? That's what he wants to see. He wants to see one of those. We are there, right? But we didn't have a wick. We have an ugly down day because the market was bad today. So tomorrow he wants to see the wick down and snap back. Then he's in, because it's not the first or second or third time. It has happened many, many times in the past 3 years. Very good, solid, high confident kind of trade for him. Okay, so Walmart looking better. Gilead, potential trade. What else? Oh, Google, of course. I bought Google today. I added more Google today. Where? 27.75 I did. Okay, so I'm okay with that position. Yeah. Looking good. Nothing to worry about with Google. Okay. So yes, Google, it's okay here. Would I like to add more at 26 at the line down here? Yeah, I can add more. I have room for more. What else? Amazon. Amazon was ugly today. Was it ugly? I can't remember. We'll see. Let's see how Amazon was. Yeah, Amazon, once again, it's hard to say anything about any stock today because the market went down big. Okay, so it's going to drag everything down. It's not going to be one of those days where you say, oh, you know, this stock is crappy. No, the only question today is how much lower did each stock go down, right? Did the stock went down to a support level or not? That is the question. On a day like this, when NASDAQ dropped 2%, nothing is going to be safe. Okay, the question is, did a stock go down to a support level? So for Amazon, it fell at the support here. So can it go back down to 30.17, 30.20, the area that I would buy? That would be the first spot that I would consider re-enter into an Amazon trade. Okay, I'm not touching Amazon here. Not in this no man's land right here. There is $150 of risk right here. Not touching it. Okay, not when the benefit is so little. Remember, I always talk about win-loss ratio, upside benefit, downside risk. It has to be 3-to-1 kind of ratio for a trade to be attractive. Okay, even 50-50 is not good enough. So when you look at something like this, Amazon have resistance right here within how much? You're talking about $50, $75. Okay, so it's like a $75 upside potential, and then $150 downside. Okay, so that's 2-to-1 risk reward thing. Why would you want to do that, right? I try to stay with a trade with a better risk reward ratio. Okay, that's the aim. We talked about Dick's Sporting Goods this morning. Yeah, it's still going sideways. It still behave like it should be, right? So my order is still there at 111. Let it ride. Let it keep going. Okay, the more it goes sideways, the more confident we can be sure that it will be a good trade in a few weeks, perhaps within 2 weeks. So just hang in there. What else did I look at? Did I sell out of? I didn't trade Costco, but Costco. Look at this. Yesterday, if you're in Costco yesterday and you didn't get out here, what are you waiting for? Okay, it crossed a key moving average. Plenty of time to take profit yesterday up here. So now you're back down here. No man's land. Nothing to do. Would I buy Costco again? Yes. When? 508. 508, 502. In this area here would be the first spot. Would I buy Costco down here at 475? Yes, absolutely. Okay, absolutely. Hello, Socrates. So Costco would be good there. What else? I will be done in about 5 minutes. Okay, I don't want to keep this more than half an hour. JP Morgan. JP Morgan. I sold at 160 at 157, right? And I think one of the viewer also had ordered to sell at 157, and I think he also trying to sell up here at 158. I hope he got out, okay? Because I got out completely. I am all out of JP Morgan, all right? It has done what I expected to do with the 50-day moving average right here, that it failed. Key understanding here. Ones, two, three, okay? Big resistance with the 50 MA. So like I say, 157 was good enough for me. I'm not trying to squeeze at 158. Right now it's 155, under 156. As I mentioned this morning, when would I get back into JP Morgan? Fill the gap at 153, 154, okay, down here, 153.6. 153.6, yes. That's where I would nibble and add down here at the 20 MA 150. So I would love to nibble here, add more down here, and add more down here, and add more down here. Okay, so higher rate good for banks, but when the market's crashing, it would drag banks down as well. Okay, so quite pleased with my trade there as far as leaving JP Morgan. How about Goldman Sachs? I had my order in to sell. It did not take. Yeah, I was bummed. My order was right there. I should have moved it down a little bit. I never want to leave my order right at the 50 MA, but that's where it was. That was a mistake. I should have moved it down like 50 cents or dollars just so that it would grab 356, 376 and get the F out. I should have done that. That was my mistake, my bad. I'm sure if I tell my teacher this, he would say, "What are you doing? You're not trying to squeeze an extra dollar. Get out." That was my mistake right there. I should have changed my order because it's still profitable. Okay, so it's not like I'm losing money, but this was the area to get out. See, it closed the gap. What was I waiting for? See, this is the kind of thing that I need my teacher to give me a smack. It closed the gap. It meet resistance. Get out. Very simple, right? Break the rule, pay the consequence. Yeah, so I'm mad at myself for not putting in the order correctly. Okay. Yes, I know it. I should have done it. I should have fixed it. I just completely forgot to adjust the order. Oh my God, Home Depot. Get the shellacking here. Home Depot, don't touch it until it get down here. Okay, it need to prove that the 200 MA can hold. So with rate rising, no bueno for Home Depot. Okay, we can see 348. We might go down to 345. Okay, so would I buy at 345? Maybe, but it need to prove to me that it can hold this right here. I'm not confident on home builder when rate is rising. What else? Oh, Facebook. Last one. I bought Facebook today. Where did I buy Facebook? Let me show you. All right, so I watched Facebook. Okay, my teacher, he said the bottom was he called the bottom Tuesday night. Okay, he started to buy at 224. Okay, so yesterday it gapped up to 232. I said, no way am I chasing. No way am I chasing. And I watch it dip down to here. I want to buy it then, but when I put in my order in, it skyrocketed to 235. So you know what I did? I put my order in here. I started to put my order in between 229 and 227. So I bought 10 share of Facebook in this area right here. Between 229 and 227. That's my 10 share. Okay, so I'm pretty happy with that action because I was patient enough to avoid all of this nonsense up here. And that's it for the quick market recap of what I did today. I don't think I left anything out. If I did, my apology. Socrates, I think you asked me about Martin Marietta. I discussed Martin Marietta at the beginning of the chat. So if you care to see what I did, I talk about it in the early first 5 minutes of the chat. Other than that, thank you for tuning in. If you watch this later, enjoy. But for now, I am out.